30 even. See if we can make any sense of this with Oliver Slope. Oliver is with Blue Line Futures, and Oliver, tell us what you're seeing this morning. We talked a little bit earlier about some activity. Are y'all doing anything with this activity?
Man, I feel like we've already jammed, 3 trading days into one so far, and we've been kind of waiting to see, are we going to get that springtime volatility that we so often see this year? And it looked like we were going to get it last week, had a strong early morning session on Friday, and then retreated to finish the day kind of near unchanged for the corn market. And that was a little bit disappointing, but kind of picking up right where we left off, seeing the acceleration back to the upside on the open, which is certainly nice to see, breaking above the 100-day moving average, which we failed to do on Friday. If we're able to close above the 100-day for corn, July corn, that'd be the first time since July 27th of last year. And a lot of times when you get a lot of people looking at the same indicators like that, it becomes almost self-fulfilling and it starts to feed on itself. So I think that's what we're seeing here this morning, is just a continuation of the short covering that we started to see over the last 2 weeks. And I know there's a lot of farmers who are kind of licking their lips, hoping that this is a nice opportunity to lay off some risk if they didn't get enough sold here over the last several months.
And what would you be looking at if you were going to lay some of that risk off? We're not quite to $5 a bushel on corn and just a little over 12 on beans. Where would you start?
Well, I think we can squeeze a little bit more juice out of this grape to the upside. A lot of times markets overshoot to the downside and to the upside, so I do think we can probably squeeze out another 10 cents in the corn market. Now, with that said, options are a great tool to really manage the risk here on these rallies where you can establish a floor, and if you want to keep the upside open, that gives you the ability to do so in case we do get a continuation and the market does overshoot to the upside. You get the options protecting the floor and keeps your upside open there. So options, great tool here. And I like to see when these grains really all work together, right? Corn, soybeans, and wheat all kind of feeding on each other. That's always encouraging. And the U.S. dollar coming off. So a lot of bullish tailwinds to start the week. We'll see if we can hang on to it.
And if you're looking at specifically corn on there now and just at that $5 level, anything really specific? I know you mentioned you would like to do some things around in there, but is there something specific you would lay off in there? The basis, I guess, maybe what I'm trying to say is the basis started to come up just a little bit, kind of supporting this price move of the futures.
Yeah, it certainly is. And that's, generally what we start to see this time of year is some premium coming back into the markets, which is nice to see. The options are a great tool. Everybody's a little bit different. Some guys had some stuff hedged for this year, last year. So it just really depends on each individual situation. But I do think we get a little bit more of an upside from these levels. You're going to want to take advantage of it, put in a floor. You can keep that upside open, see if we can't get more of a springtime push higher.
All right, Oliver, stick around. We're going to go away and take a real quick commercial break. We're talking with Oliver Sloop. Stay with us. 205. So we're going to ask Oliver to come back in again. Oliver, we saw a tremendous amount of volatility in the markets last week, but really didn't go anywhere. Are you anticipating something out of that?
Well, a lot of volatility really going back all the way to last fall. Last week, obviously, a big announcement from the USDA with regards to their beef samples coming back negative for avian flu, which, got the market a little bit optimistic. But I think the lack of follow through on that headline was a little bit of a caution flag. But I think really what we're probably, likely going to see here is a little bit of a role reversal here. A lot of the grain markets were dull to start the year, and all the action was in livestock. Well, now I wouldn't be surprised to see the grains really come back to life, and the livestock kind of chop around here, which we seasonally do this time of year. On top of that, these headlines with regards to the avian flu, whether there's any merit to it or not, it's probably going to keep some of the buyers at bay from these money managers. I'm not sure who wants to be, trading a market where you get headline risk in the overnight or weekend hours that could really impact the position and the P&L there. So I wouldn't be surprised to see that discourage some market participation there. And we can see that in the commitment to traders. Funds long, only about 33,000 futures and options contracts in live cattle, which is really just a very neutral position. So I wouldn't be surprised to see us establish a little bit more of a trading range. But again, I think the trading range probably presents some great opportunities on both sides of the market here for the next month or so.
Well, and I've watched that open interest quite a bit, and it is dropping precipitously in there. I think we're down around 276,000 contracts in the live cattle market. So it's gone down considerably on there. So at least that leaves room for growth, right?
there is room for growth, but the economic data is going to be really important, which is kind of interesting because we're seeing a lot of risk on in the outside markets, but for the wrong reason, slower growth, right?
Absolutely.
And that is not good for the beef market.
Absolutely. Oliver, really appreciate you taking the time to be with us this morning. As Oliver Slope, he is with Blue Line Futures. And Suzanne, one more time back to you, dear.
I like how you spin that.